If you look back at the history of banking, I've been doing it again since 1977, banking runs in cycles. Regulation in banking runs in cycles. It very seldom stays in the middle. You have a problem with banks or a problem with downturns in the economy, banks suffer, regulators and lawmakers come in and they change the rules of the game, and it becomes more complicated. That goes on for 4 or 5 years. Things get better, the economy improves, regulations are backed off. So we've swung the other direction now. You have unusual business plans develop, you have banks do stupid things, and as a result, there's problem banks, and the regulators and the lawmakers swing the pendulum back the other way. 2008 was a watershed year because of the Great Recession, and we saw a significant amount of re-regulation during that period of time, and we're still suffering through that. There have been some changes since then to loosen those regulations because they over-regulated small community banks. The problem was not the community banks, it was the large banks and investment banking firms that did some of the unusual financial products, let's say. But the community banks suffered from it, and they were the beneficiaries of the pain, and unfortunately became the beneficiaries of regulation by default. So we've seen a lessening of that in the recent years. The fact that the regulators are encouraging de novo banks again. That's a big issue, a big point, that they are now opening the doors to new banks to try to get new people to enter banking.